Welcome to the channel. Here, we provide clear, actionable insights into the complex world of tax and accounting to help your business thrive.
Estate planning. For a lot of us, just hearing that term can feel a little overwhelming. But honestly, getting it right is one of the most important things you'll ever do for your family. So today, we're going to break it all down into simple, understandable steps. Let's jump right in.
Does this sound familiar? This question right here, it just perfectly captures that feeling of uncertainty so many people have. If you've ever felt this way, trust me, you are not alone. And by the end of this, you're going to have the clarity you need to move forward with confidence.
So here's our game plan for today. We'll start with the absolute basics. Then we'll look at the big decisions you'll face, introduce the most powerful tool you've got, and then bring it all together with a super clear final plan. Let's do this.
Okay, so first things first, what is estate planning at its heart? It's really simple. It's about making sure the assets you've worked so hard for go to the people you love exactly the way you want them to.
But it's about way more than just what happens after you're gone. Good estate planning gives you control right now, it creates a really efficient process, and it makes sure your wishes are legally locked in, all while being as tax smart as possible.
So once you decide to start planning, you pretty much immediately run into a huge fork in the road. Do you give your assets away while you're still alive, which we call gifting, or do you plan to pass them on after you're gone, which is inheritance?
Let's stack them up. Gifting sounds pretty great, right? You get to help your kids out when they might really need it. But, and this is a big but, it comes with some serious risks. You give up all control. And what if they spend it unwisely? Or worse, it gets caught up in a lawsuit or a divorce. Inheritance, on the other hand, means you stay in the driver's seat your whole life. And, as we're about to see, it comes with a huge tax advantage.
And that leads us to a really crucial point. For most people, inheritance isn't just a good idea, it's almost always the best financial choice. And the reason why comes down to this one powerful but kind of misunderstood tax rule.
This right here is the magic key. It's called the step up in basis. Now, what does that mean in plain English? It means the IRS essentially forgives all the capital gains taxes on assets you pass down when you die. It's like your kids inherit the asset as if they bought it themselves for its full market value on that day.
Let's make this really concrete with a quick example. So let's say our friend Hong Gildong bought a property years ago for $100 grand. Over his lifetime, it did incredibly well, and now it's worth $2 million. That's a $1.9 million gain right there. Okay, so Hong Gildong passes away, and his child inherits the property. Now, if that child immediately turns around and sells it for its full market value of $2 million, how much capital gains tax do you think they owe on that massive $1.9 million gain? The answer is zero. A big fat nothing. Not a single dime. Because of that step up in basis, the child's new cost basis became $2 million. They sold it for $2 million, so there's zero taxable gain. This is why holding on to those appreciated assets and passing them through an inheritance is just so incredibly powerful. It's a benefit you totally lose if you gift it away during your life. Okay, so we've established why inheritance is the way to go. Now we got to talk about how to make that inheritance process as smooth and painless as possible for your family. And the number one tool for that job is the revocable living trust.
The main reason, the absolute number one goal of a living trust, is to avoid something called probate. So what's probate? It's the court system getting involved to settle your estate. It can take months, sometimes years, it costs a ton in legal fees, and it's all public record. A living trust lets your family skip that entire mess.
Now, I know the word trust can sound a little intimidating, but it's really not. Just think of it like a simple company. In any company, right? You have a founder who starts it, a manager who runs it, and a shareholder who benefits from it. 3 simple roles.
Well, a trust has the exact same setup, just with fancier names. The creator is the grantor, the manager is the trustee, and the person who gets the benefits is the beneficiary. See? Same idea. So with that in mind, how does this actually work?
And here's the punchline. With a revocable living trust, while you are alive and well, you are all 3. You are the grantor who sets it up, you are the trustee who manages your own stuff, and you are the beneficiary who uses and enjoys it all. You give up absolutely zero control. It's still your stuff, just held in a different legal box to avoid probate down the road.
Now, it's really important to know there are 2 main flavors of trusts. The revocable living trust, the one we've been talking about, that's the simple, flexible one almost everyone needs just to avoid probate. Then you have irrevocable trusts. Those are the complicated advanced tools where you do give up control, and they're used in very specific high net worth situations. For the vast majority of us, the simple living trust is all we need.
All right, let's tackle the big question that's on everyone's mind. What about the death tax? Are my kids going to get hit with a huge tax bill when they inherit? This is probably the single biggest myth in all of estate planning.
Here's the reality. The vast majority of people will pay zero federal estate tax. For 2024, every single person can pass on over $13.5 million completely tax-free. And for a married couple, you can double that. We're talking over $27 million. So unless your net worth is up in that stratosphere, federal estate tax is simply not something you need to worry about.
And you know, even for that tiny percentage of families who are over that limit, there are standard, well-established strategies to handle it. A really common one is using life insurance to provide the cash needed to pay the tax bill, so that other things like a family business or a home don't have to be sold off. So we've covered a ton of ground here. We've gone from the what and why all the way to the how. So let's wrap this all up and boil it down into one final, super simple action plan that works for almost every family out there.
Here it is, just 3 steps. First, plan to pass your big assets through an inheritance so you can get that incredible step up in basis. Second, create a simple, revocable living trust. That's your vehicle to avoid probate. And third, and this is so critical, you have to fund the trust. That's just a fancy way of saying you transfer the legal title of your assets, like your house and your brokerage accounts, into the name of the trust.
And that brings us to the end. We've taken these complex ideas and hopefully laid out a really clear path forward. So the only question left is the one for you. Is your plan in place? Taking these steps is truly one of the greatest gifts you can give your family, protecting them and ensuring your legacy passes on smoothly. Thanks so much for joining me.